Inside Options is brought to you by the Johannesburg Stock Exchange. Manage your risks with SAFEX style options.
Hello and welcome to another episode of Inside Options. I'm Jane PG and joining me is James Boardman from the JSE. James, today we're talking about derivatives and derivatives as tools for managing risk. And let's start off with a look at how derivatives impact on everyday lives.
Yeah, you know, that's something that a lot of people don't understand, Jane, is that derivatives in this day and age are almost becoming unavoidable. No matter what you're doing, there's going to be some aspect of your economic life that will be affected by derivatives. So we're going to look at just a few examples of that and talk a little bit about them. Now, our show is called Inside Options, and an option is a derivative. So two main types of derivatives in total are sort of futures, options, and then over-the-counter stuff, there's also swaps. So we're just going to talk a little bit about some of these differences on exchange, off exchange, over-the-counter trading, some of the benefits, some of the advantages, some of the disadvantages of the two different sort of systems. And let's look at derivatives and the impact they have. So I've got some quite fun slides we can look at. So whether you're saving for retirement, with the stock graph, filling up with petrol, or farming mealies in the Free State, derivatives have an impact on your economic life. So I mean, something sort of as basic as the petrol price, a lot of that price is due to movements in the futures contract, which happens in Chicago and on NYMEX in the United States. And there's a huge amount of trade that happens, and that drives the prices. Mealies in South Africa, it's one of the biggest exchange-traded commodities. Farmers use options to hedge. They're busy hedging as we speak, their next year's harvest. A big part of them getting financing from the bank. That's also because they've hedged in that price with derivatives.
And also we're looking at Forex, foreign exchange as well? Exactly.
Forex, one of the biggest markets in the world. Everything we buy or sell in the country is either an import or an export, basically. And hence there's very little local trade now. I mean, your fridge. The price you pay for a fridge is dependent on economic conditions in, say, Europe and China and our relative exchange rate. So inflation, the price you'll pay on your home loan.
Or a car.
I mean, cars imported and exported.
Just briefly, how? Why is the price that you pay impacted by derivatives?
Around the world, people use derivatives to hedge their exposures.
Yeah.
They use to take a view or to lock in a certain rate. And if you're a business owner, you want some kind of certainty on what kind of price you'll be able to get for your goods. So you're going to have to lock in a foreign exchange rate in advance to take that element of uncertainty out. So a lot of businesses around the world. So that's why they'll use derivatives. And derivatives, their prices can actually impact on the dollar rand. It's a very liquid currency. There are lots of forwards and options. Yeah. With Subhashini the other week, we actually looked at how liquid it is. We punch way above our weight. We're sort of the 9th or top 10 most liquid. I think we just slipped to number 10. Most liquid currency in the world, especially out of the emerging markets. And it's pretty interesting because in economic terms, we're only about 36. So because of that, our currency tends to swing and gyrate sort of wildly.
All right, so James, it's not really a case of being able to ignore derivatives then because they're so much a part of our everyday lives.
Yeah, you can't really ignore derivatives. You know, you can learn a little bit about them, and even if you're not directly involved in trading them, it's good to start on a journey towards understanding them because somehow they're going to affect your life. And a big part of what they can give you back is some economic control over things that seem uncontrollable. So in South Africa, we have exchange-listed derivative products on commodities, equities, interest rates, and currencies. So there are also lots and lots of markets overseas you can trade these instruments in, and South African investors now can trade in quite a lot of these markets. So they all provide you with the ability to profit from market opportunities and to manage some of the economic risks you face. Now, some of these risks we don't even think about in our sort of daily life. One risk is interest rate risk. You know, at the moment, our interest rate market, we're desperately trying to get more derivatives going on that, and we've got a JIBAR future, which is a short-term interest rate sort of contract that we're trying to get trading. And it's quite interesting because interest rates have a big impact on all our lives.
Absolutely.
Mainly in mortgages and home loans and just personal finance. In South Africa in 1998, because of the Asian currency crisis, interest rates went to 20%. So I mean, I think to people out there, you guys in the audience, if you were young, if you just taken your first mortgage out, you don't know what 20% interest rates are like, talk to your parents or an older colleague about what it was like. It could be a real eye-opener to everyone out there. It's risks we could face again, and be aware that that can happen, and that's something you have to sort of take into account. So part of that is, at the JSE's derivatives division, we want to have a future where there are liquid, deep, electronically accessible markets where you can trade all sorts of things, including, say, something on interest rates.
All right, so given Governor Jill Marcus's recent decision to keep interest rates on hold at 5.5% repo rate, how would then a member of the public, given your ideal future of being able to trade electronically, how would they go in and trade that interest rate? Yes.
Nothing happened. So, for trade to happen, there kind of has to be a price movement.
Right.
Maybe you could trade, if they're starting to price in that there's going to be a movement and you say there won't be, then you can trade against that. You could go short the rate increase.
Right.
That could be one of the things you could do. The thing you really want to watch out for, though, these little movements from 5 to 6 to 7% is not going to wipe you out. What you would maybe think about doing is taking out an option on interest rates above sort of 15%, or you could even lock in a rate. You could take out some sort of interest rate swap or interest rate futures with some options, and then you could actually construct a way that you could hedge out your own economic risk from interest rates. It's really quite sad, because the fixed rate mortgages that some of the banks are offering, they do seem to have a pretty seriously high rate when we've got record lows. But they're pricing that it's going to mean revert back to the long run average of South African interest rates, which is fair enough. They're allowed to do that. But we would like you to be able to lock in that sort of wholesale rate for everyone out there in the market.
All right.
That's really what on-exchange derivatives are about: managing your risk, mitigating your risk. And that's what the over-the-counter market is about too. People managing their risk, hedging their risk, very specifically tailored to whatever your needs are.
Let's go through some more examples here. I know that you have some for us.
If you're a pensioner, for example, you could earn extra returns by writing covered calls on your stock portfolio. That's something that they do in the States, that they do in Australia, that guys do in England. That is something you could do.
Going on holiday?
Going on holiday, you could lock in a forex rate. You could say, I'm worried the rand is going to get weaker and I'm going on holiday to Europe in 6 months. You could lock in that rate now. People already do that. And the problem partially is that people are frightened of derivatives. They're sort of nervous, and they just sort of hear one or two alarmist things in the media, one or two scary
quotes.
Go on,
attack the press there again, James.
Yeah, no, I think Rupert Murdoch and the scandal, it's amazing how much news that is. Reading English papers,
Absolutely.
It's just that's in every single article. There's some sort of mention of it.
Certainly worthy of debate there.
Yeah.
Berkshire Hathaway's 2002 annual report, Warren Buffett saying, of course, derivatives are financial weapons of mass destruction.
Very famous quote. We look at that. I've actually got a copy of that on my flash drive here. We emphatically disagree with him on that. We really don't think they are. Derivatives, despite his report in 2002, their company still uses quite a fair amount of derivatives, especially in their insurance division. You can't run an insurance company and not have quite a serious amount of derivatives on your books, just to manage your risks, your long-term risks of interest rates, bond returns, stock returns. So, if we think of a kitchen knife, that's an analogy that my boss Alan Thompson likes to sort of get into. Is that
the knives out?
You got the knives out. You've got some serious kitchen knives here for use. Now, you can't make supper without having a kitchen knife. But in the hands of a knife-wielding maniac, it's a pretty terrifying thing. In the hands of a master chef, it's a thing of beauty, and you can do amazing stuff with it. So basically, it's a tool. It's all the intent and the manner in which it's used. And that's the same with all derivatives around the world. Nearly every time derivatives go wrong, it's because they've been used incorrectly by people who weren't 100% cognizant of the risks they were facing, or were very, very short-term focused. So, I think when I first learned to drive, I found cars completely terrifying. If you think about it in the abstract, a car is 2 tons of metal with a serious fire inside it that can just run people over, crash you into a brick wall. It's a very scary thing. But most of us in our daily lives use cars, some form of car. The internal combustion engine has just had this incredible impact on all our lives. Once again, it's how you use it. These guys are using cell phones whilst driving, really bad. Raise your insurance premiums and is not great. So what we're trying to do with our education is turn people into rally drivers, not reckless drivers.
Advanced driving.
So to be more skilled, have more of an awareness, know how the car works, to be one with the car. Sort of that is what we want the general public to do, is to get more skilled.
So not to be like SAA, which lost about
Exactly.
R1 billion hedging the oil price.
Exactly. It's market timing, and there are different ways you could do it. Partially, it was possibly because they did it with futures and options. Maybe they should have just used options. There are quite a few different structures they could have used, and it depends when you hedge. It's a very skilled trade. So when you're trading derivatives, you want to be trading with a rally driver like this slide here,
Okay.
or this slide of a master chef. That's what we're aiming for. Master chef knows how to use a kitchen knife. It's a dangerous tool. A rally driving car, it's a fast car. It's dangerous. It can spin out of control. You've got to know what you're doing.
All right.
So that's what we're hoping people watching the show are on their journey towards becoming the rally drivers and master gourmet chefs of the derivatives world.
Right.
So just by watching this, you're on the way there.
Well, keep the foot on the gas. We're going for an ad break now. We'll be right back. Stay tuned.